Welcome everybody. We're delighted to be joined again by the executive team of ClearStar, who have just reported a very good set of first half results today. We have Bob Vale with us, CEO and one of the founders of the business, and also Jennifer Balleza, who is the CFO of the business. Bob, we might start with you. Maybe for people who aren't too aware of the business, you've got this, it sounds a very technical phrase, that you are masters of human capital integrity. Now, perhaps you can explain that in a nice, simple way for us.
Human capital integrity is nothing more than qualifying or validating the information that an individual already represents about themselves. Mm-hmm. So if they represent themselves with an education level, or of not using controlled substances, or having worked someplace before, or being the person they say they are, we cover the gambit to ensure that that individual is true to themselves. Which
is becoming ever more important in society these days. We see a lot of change in the way people work and how employers are adapting to the gig economy. And it sounds very much as if you will be involved not just in recruitment of people, but helping businesses maintain the integrity of their workforce going forward.
Yeah, employment is no longer a segmented relationship with an employer. It's now diversified. People may have multiple jobs. They may have requirements to go to multiple locations, but not on a regular basis or at any given interval. So we have people with 3, 4, 5 jobs and only working on demand. So not only do we have to screen them based upon those requirements, but also some employers during the time of the engagement require continuous monitoring. So for example, in areas of amusement parks or facilities, zoos, or even schools, we do continuous monitoring of sexual offenders to ensure that someone doesn't commit an offense during their employment where they would have to be excluded from the environment.
Mm-hmm. So that leaves you as not in any way cyclical or linked to the health of the economy. America is clearly your main market at the moment, where unemployment is nudging historic lows, but it sounds a very sustainable model going forward.
Yeah, well, we've seen traditionally, so if you look back in 2008 when the economy took a dip, we actually took a rise. So we have not been impacted by labor or employment ratios. Mm-hmm.
And a feature of these results were the comments you made about very good progress in serving new markets. Mm-hmm. Now, what would you categorize as newer markets for ClearStar?
So we've we've serviced the new markets across a pretty broad spectrum. We're now involved in petrochemical and screening for drug screening in that environment. We also now are into financial services, which is a pretty in-depth screening model. These are individuals that would be at help desks for financial institutions, or being given investment advice, or following up on queries from investors about their portfolio or about their holdings. That's been a very large driver for us. And we've seen some good growth in student exchange, where we're screening students who want to come into the United States to a host family, and then the screening of the host family and continuing monitoring of the host family.
And it sounds large areas, particularly financial services. So you could name a few names. Are you dealing with leading brokerages or retail banks or both?
Right, we're dealing with leading brokerages and banks. Most banks do have a leading brokerage, but a lot of this is staffing placement. So it's driven mostly by contract, where they're spinning up a help desk or a new product, and they need a very quick to market solution. And in financial services, it's a very in-depth screening. Some of the constraints that we're held to under what is our Fair Credit Reporting Act, which is the regulation that we have to follow, don't apply to these, or gives us a lot of latitude in this service to do a more in-depth check.
Mm-hmm. Well, I imagine if they're interfacing with their customers and they're in a regulated industry, they can't afford to have employees making mistakes or being poorly qualified. Does that have implications for what you can charge them? And I hope that none of your clients are watching this interview. But,
no, quite frankly, it does, and they're understanding of that. Not only do we charge more for the service, but sometimes we work it through the weekend to get the contract fulfilled to put enough people in the seats within the period of time that they require.
So extending security, not just for your clients, but I imagine it's very important the way you handle data as you're doing the research on behalf of your clients. How does that work for the larger businesses that you work with, the likes of Wells Fargo that you've mentioned, when you have to move out of the domicile of the United States, and if they have employees or potential candidates in different countries or even in different continents, given the constraints of GDPR, which are getting ever tighter on a global basis, how do you stay within regulations there?
Well, so GDPR is a pretty progressive requirement. A lot of companies struggle with not only the implementation, but quite frankly, the interpretation.
You must be delighted that they're struggling with
that means.
Yeah.
So GDPR is a restriction of data based upon host country requirements, how that data is not only transported, if it can be transported, but how the data is handled at rest or the data is expunged. We have the capability in our environment to control data by LADA, meaning that by location we can set business rules that allow us to get results of the data, a pass-fail, but keep that data in residency. We do that in a cloud-based environment. We happen to be using Amazon right now in their AWS environment. So we can spin up servers in countries or in jurisdictions that allow us to keep that data in-house. Now also, a big drive right now, and we just received our ISO certification for security,
last month,
is the protection of the data. How do we not only store the data at rest, what precautions that we follow, how are we screened? We have third-party contractors that constantly test us for penetration to ensure that our environment is secure. We are also certified at the code level, meaning that every time we write code, we submit it decompiled to ensure that we've got no holes in that. And we have our own in-house security team who constantly monitors our environment, upgrades our firewalls, ensures that we're meeting current standards and we're responsive to current threats. On top of all that, we have compensatory measures in the event of a violation so that we can react very, very quickly and try to limit the risk to our customers.
Yeah, well, that's I think a lot of very helpful background in a fast-moving market. Now, if we come on to the figures you've just reported today, and Jennifer, I'm sure will run through the granular detail of it. But from your perspective, what was most encouraging? We talked about the newer markets, and we've watched you sink quite a lot of capital into expanding your sales team in recent months and years. Is that coming to fruition now?
We recruited an enterprise level sales team that really started getting traction in Q4 of last year. They've been driving the product up market. They have the skill set and the ability to be able to articulate our value proposition to the C-suite, and we're getting much more responsiveness in our sales funnel when we try to pursue new industries or new avenues to market. The team has been doing a great job from an organic sales perspective in the direct market, meaning going right to the employer and selling them services and solutions.
And in terms of the offerings that you have, direct has been a notably strong performer. Revenues were up
46%.
46%, and the other standout performer was in medical information systems.
Medical information was up 25%, but medical information was a much larger segment of the business, so it had a much greater impact on our total revenue numbers.
And how does the MIS offering differ from the direct in terms of what clients are buying?
Well, some of the MIS offering is direct, meaning that we're providing clinical services or occupational health or drug screening directly to the employer. But the fastest growing segment in MIS is where we're providing it as a white label to competitors.
Outsourcing.
Outsourcing to competitors. We have a product of differentiation when our competitors find themselves in a situation where they cannot be responsive to their customers. We have the perfect solution for them. We service 3 laboratories, multiple services. We have over 20,000 repository locations. So we blanket the geographic boundaries of the United States.
And that suggests, again, if you're providing services and technology that your competitors cannot, that's very much part of the ethos of ClearStar, isn't it? You are looking forward rather than backward.
And that's true, and we introduce new product all the time. It really is about getting the velocity to stay ahead of the demand. So a year and a half, 2 years ago, we introduced biometric facial recognition, and it took a while for that to be accepted, and now they're using it as your ticket for the airline. So now employers are more readily accepting that this is a way to identify people. We've done that on several product lines.
I won't ask you what's going to be big in 3 years' time in case any of your competitors are watching this interview, but it makes sense that the pace of technology in all sectors is so rapid. You keep investing in it. Well, that's the important thing.
You have to.
Good. And what about the clients themselves? Not just where you're already making headway, but strategically, we've already mentioned the fact that large international groups can take advantage of your offering. You refer to tier one clients in your RNS today as what you'd like to see growing in importance. How are you defining tier one?
Tier one clients are employers of a certain stature that have employ so many people. So we target in excess of 2,000 people, and industries that have high turnover rate, or 2,000 seats and are using 5,000 people to occupy those seats. So that's the up channel, and it's pretty easy to identify them because most of them are using some type of applicant tracking system because they need that to manage the volume. And our goal is to integrate with those applicant tracking systems and make our solution seamless.
And are there a small number of major players in the applicant tracking system market that you want to cozy up to, or is it a very disparate, regionalized model?
There's big players. We're servicing two of the larger players. The largest being SAP with their SuccessFactors product. Identifiable that we feel have impact are about 30 applicant tracking systems, but there's a small percentage of the spectrum that's available. And
then perhaps we can come back to later on and talk about outlook and strategy, but looking at the more immediate term, your statement to the market today is expressing full confidence about the second half of the year and going forward. Where are you expecting to see growth in revenues from?
We're very confident on the direct line, going directly to the employer and going up channel to the tier one clients. We've got a very refined and groomed sales funnel. Also, the way our market works with implementation, it sometimes takes up to 6 months after the signing of a contract to get a customer onboarded. So really we have a lot of visibility as to what our potential is over the next 6 months because those contracts have already been signed.
Yeah. Great. Well, we might now just have a word with Jennifer, look at the numbers in some detail, and then come back to you shortly. Jennifer, lovely to have you back, and
Thank you, Andy.
like last time, you have good news to talk about, which must be nice.
It is very nice
in your role. So, what would you pick out as the highlights from the first half report?
I would probably say our 17% growth in H1 of 2019 to 11.6 million. That is something that they're very happy to report to the market, and we're on track to be in line with market's expectations as far as our performance for the rest of 2019.
And what's happening at the margin level?
So our margin, we're kind of tied to our product mix. Our MIS revenue is up 25% compared to last H1, and the MIS has a lower margin, but we're able to offset that loss in margin with some purchase purchase efficiencies with the increase in our volume with some of
Economies of
our
scale. Yep.
right with our screening suppliers.
So that's quite a, I won't say problem, it's a nice challenge for you to manage a high growth business, a high volume growth business with slightly lower margins against other businesses that are also going quite nicely and better margins at direct. So
Correct.
We can see a similar picture going forward then.
Right, our direct services are up nearly 50% compared to the last H1. So we're having some nice traction there that we're happy with, and that's just based off of the investment in our sales team.
Yeah.
So we're starting to see kind of the return on kind of enhancing our internal sales team.
Yeah, so it's nice to see a combination. Bob was talking about the investment in technology, staying
Correct.
ahead of the game and the competition, but you still need the human angle as well. It sounds like a good sales team that you could keep them happy.
Yes, yes, agreed.
Yeah, and in terms of cash moving around the business, you're quite a seasonal business looking back at recent years. How will that affect working capital? And the second half has historically been a nice period for cash coming back into the business.
We think that the cash that we have on hand will be able to sustain us as far as continuing to invest in our sales efforts and to help us continue to grow that top line. We don't expect to use our line of credit, which we did back in H1 of 2019. So that's good news. And we feel pretty good that we won't have to use that line, and that we'll just be able to continue with our strategy of trying to grow our revenue.
Mm-hmm. And you mentioned the facility. That's with Silicon Valley.
Correct.
Isn't it? And they are, I would hope, happy with your growth and your move to EBITDA positivity.
Yes.
So is that facility, has it been held in place or expanded? Anything?
Yeah, SVB has been a great partner. We just recently renewed our line of credit, so now it's been extended to October of 2021.
And maybe you could just comment a little bit about when revenues hit your books. Bob was talking again about the visibility you get from contracts that are already signed that aren't yet generating income. Presumably there's quite a difference between the MIS and when revenues can accrue from spending weeks or maybe even months trying to generate income from a direct lead. Is that the case? Or?
Yes, so a lot of the revenue growth that we're seeing in H1 of 2019, those are the customers that we were able to win back in 2018. So we're starting now to kind of see the momentum from the sales effort. And so now we have, just based off of the new contract wins that we had here in 2019, we have pretty good visibility about how revenue will be tracking in the last half of the year. And we're pretty confident that H2 will perform very similar to H1 as far as growth. And you've even noticed that our analysts have increased our revenue expectations for 2019.
And with all this business coming through at the top line, are you having to make a lot of investments at the bottom line, or is there a lot of operational gearing in the business? Does it vary by product?
Yeah, there is some operational gearing. We've been able to keep our OPEX pretty level and to be able to support the growth, so we haven't had to increase our headcount dramatically. So yes, we've been very disciplined in trying to keep our expenses consistent and in line.
And presumably some of the products are quite technologically led, so you don't actually need a lot of headcount for it to function.
No, I think there's some capacity for our current resources to be able to scale our revenue up. So no, we're pretty good on the OPEX side.
Yeah, maybe we can just finish off talking about the clients who are providing these revenues, and as you grow, obviously the number of clients is growing. do you have much dependency on your largest one or two clients, or do you see that diminishing the dependence on a small number as you start interacting with larger groups?
The way that it's trending, in the past, a lot of our revenue was concentrated in our channel side with our resellers. And just due to the sales team efforts, we've been able, we have about two direct customers that have kind of broken in that top 10. And our largest customer, they're about 10% of our revenue, but as that direct business continues to grow, I don't think there'll be a sales concentration with one specific customer.
Their relative importance will diminish as the others come through. And is that also playing out? You mentioned direct. Bob was talking about the strength of financial services as a new sector. Are any of the largest clients already coming from that segment?
Yes, and in fact, one of the top 5 is a new contract win that we received in 2018 in that financial services sector. So we're seeing growth in that sector, and the results are in 2000. I mean, that's probably a huge contribution to our improved performance in 2019, in H1 2019.
Well, good to hear. And I hope we see you again in 6 months' time with further good news.
Good. Thank you, Andy.
Right, Bob, let's look a little bit further forward and more about the strategy of the business, which has been extremely successful in terms of growing revenues and whilst keeping costs and OPEX under control, as Jennifer's slides have shown us. So strategically, what do you want to see happen in the next few years, both organically, and then we might talk a little bit about the potential for M&A as well?
The paramount, as we have said, the paramount driver for us is integrations. That's faster onboarding ratio. It gives us more inroads to a diversified customer base, so we're driving those out. Continuing to develop our product offerings that are a differentiator for us in the marketplace, and these are solutions that are ancillary to what would be considered the traditional employment screening market. We want to get more run out of our increase of repositories for our medical information services group. Now that we support 3 laboratories, over 20,000 locations, we really want to emphasize the use of that footprint to garner some of the geographically dispersed customers. And the products that we're offering now that cover the entire life cycle of the employment process, for example, not only the biometric identification, but the virtual badge product that allows for cellular phone identification of individuals or badging to get into certain access areas. We're really going the whole gambit of the management of the individual. I think these are differentiation points that are going to really drive that tier 1 opportunity that we're pursuing.
So that's a combination of winning more tier 1 clients and selling more services and products to clients that you've already won.
That would always be the goal, yes.
Well, I think a lot of businesses harbour after that as well, but you're already seeing the visibility of that.
We are. We are.
And how much money is going into the investment on new technology? You used the biometric example. Do you look at investment in R&D as a percentage of your revenue, or is it something that is a set sum that you move forward with?
Well, some of it's driven by strategy, which is R&D, where, for example, we just implemented a new core system for our medical information services group, which was a third-party system, but required a lot of our intervening to contour and develop interfaces to make it usable in our environment. And other strategy projects that we have working that are a little far-reaching. But a great deal of our functionality is driven by customer demand. When we find a certain industry, and this was the case with our SuccessFactors touchless integration, that requires a solution, or even our biometric solution, we see that as an indicator that, well, it may apply to this one job tactically, and we'll develop it for that, but we always see what the extensibility of that product is, where else we can use it, how it can be interpreted. We try to throw nothing away in the tactical development of technology, we try to parlay it into something that has more value.
And presumably following your clients, which is always a risk-free way to growth, also extends to new countries or new domiciles where a large client will ask you to do work in South America or India or the other places you're already active.
Well, and that's a good example of the technology following the client. We get those demands, and it's not only the ability to support LADA rules, but our technology is multilingual. It's also multi-currency. So when we order products there, it'll keep track of what language it's ordering in and translate back to us. It'll do the same thing with cost and currency, and it knows the requirements for how wet signatures have to go on documents. And all of that was evolutionary, dealing with companies who had that demand.
So that's the organic picture, and growth has been very good for a number of years. Healthy double-digit clip in terms of percentage growth reported this time around. Are there opportunities to accelerate that growth, or gain new clients, or new products, or indeed new partners by potentially at some stage acquiring another business or businesses?
Well, we are always evaluating acquisitions, and we divide acquisitions into three categories. Either they're an increase in sales funnel, which allows us to get more volume to be able to leverage our supplier base, or they are strategic in nature, that allow us to integrate with more similar technologies that process human capital, applicant tracking system, payroll systems, or they're tactical acquisitions, things that we need today that would have a direct impact upon the revenue stream that would give us an opportunity to increase the velocity of the revenue stream.
We mentioned earlier the very buoyant US economy and job market. Are there transactions of this nature taking place within your world at the moment? And if so, given the scarcity of supply, do you know what sort of exit multiples these companies are being taken out at?
We're depending upon book of business, structure of the business, and if they own unique technology or data. We see it on the lower end of 3x, on the higher end of 7x. So considering we are a company that owns a very progressive technology and have a substantial book of business that is organically growing quite significantly, we would probably be on the upper mid-range of that multiple.
Yeah, and the stock market quote and market capitalization isn't anywhere near those numbers at the moment.
Not.
Probably just north of slightly more than 1 times, I would think, looking at the
1.1 something, right?
So I'm sure you'd like to see it happen, but at some stage, ClearStar itself could therefore be a consolidation target for a larger group that lacks the progressive nature of your technology and your approach to the business. But only time will tell on that one. And then perhaps finally, as a founder of the business, you've seen it through this very exciting growth stage. You've become EBITDA positive this year. Realistically, well, let's say organically, how much further do you think it can scale in coming years? What sort of revenues do you think that the business can handle and generate in a positive and profitable way for shareholders?
We have a very keen eye on a $50 million target, and we see that as being a short-term goal with a design for a $100 million business within the next 7 to 10 years.
Okay. Good. Well, that's a good target to shoot for, given the success of recent years. I'm sure it's eminently achievable. And we wish you both the best of luck in that. For those of you who are interested in third-party analysis, the equity development research written by Paul Hill has also recently come out, which I do believe has that $50 million revenue target a few years down the road, but not too far. So thank you very much, Bob. Thank you, Jennifer, and we look forward to seeing you again soon.
Thank you.